Oh, hey there, tech and streaming enthusiasts. Buckle up, because today's hot ticket item is Netflix. And boy, do we have a lot to unpack. So why is Netflix creating buzz today? We've got our sights set on their upcoming Q2 earnings report, scheduled to drop on July 18th. Let's dive into the juicy details and what analysts are saying. First off, Netflix is forecasting its Q2 revenues to jump by 16%, translating to a cool $9.491 billion. If you're cosmopolitan and think in foreign exchange neutral terms, that's a snazzy 21% growth, thanks to some price tweaks in Argentina and its currency devaluation. And despite Netflix's projection, the Zacks consensus estimate has even more faith, aiming for $9.53 billion in revenues. On the earnings per share front, Netflix is batting for 468 cents, a solid 42.2% increase from last year. However, the genteel folks at Zacks are a hair more optimistic, pegging it at $4.70. For those betting on Netflix pulling another surprise, as they did last quarter by jolting us with a 17.7% earnings surprise, hold your horses. The consensus and forecast gap is narrow this round, throwing some cold water on hopes for an earnings blowout. So what's Netflix been up to? Aside from streaming your fave shows and creating water cooler buzz, they've also been rolling out some strategic moves. Remember their low-priced, ad-supported plans? Those aren't just there for your frugality. They're also a gambit to reel in more subscribers and revenue. Tack on their crackdown on password sharing. Now, how many of you felt personally attacked? This strategy spans over 100 countries and reportedly covers more than 80% of Netflix's revenue base. By incorporating these ideas, Netflix has not only boosted its subscription model, but also laid down a gauntlet in the competitive streaming wars. Despite a probable seasonal dip in new subscribers this quarter, Netflix expects to see year-over-year growth in global average revenue per membership. Another notch on their belt? Expanding their games portfolio with titles like Grand Theft Auto: The Trilogy to keep you even more engaged and slap your productivity into submission. Still, it's not all smooth sailing. Competition remains fierce, with Disney+, HBO Max, Peacock, Paramount+, Apple TV+, and Amazon's Prime Video hot on their heels. Traditional TV, TikTok, and even gaming also nibble away at that precious attention span we all hate to admit is short. Zooming out, let's ponder the stock value. Netflix has gained 38.4% in the year-to-date period, easily outpacing Disney's meager 7.3%, and even Apple's uplifting 22%. But keep an eye on those valuations. Netflix trades at 6.85 times forward 12-month sales, rather hefty compared to its 5-year median of 6.02x, an industry average of 4.43x. Sure, it might look pricey, but its first-mover advantage and monstrous global footprint still make it super attractive. So brace yourselves for the July 18th earnings reveal. Whether you're a bull or a bear, Netflix has plans to keep redefining the streaming game and maybe even your subscription habits. Trade confidently and keep those alerts switched on for the latest in tech. Now that's it for Netflix. Don't forget to stay tuned right here for all your breaking tech news, summarized into spicy, binge-worthy bites. Thanks for watching to the end. Remember, this is just one story from our full daily show, which includes all the other news and an analysis of the day's tech market activity. If you found this video interesting or insightful, then please like, subscribe, and share it with others. Your support is greatly appreciated. Catch you later.